On this, Morgan Stanley financial advisor George Noceti joins us live. George, thanks for taking some time. I imagine you're a busy man tonight.
Trying to put fires out. What does all this mean?
So what does it mean? You tell us. Well,
the president named names and he gave numbers. That's what we kind of wanted to know. So it's really every country. There's literally hundreds of them that could be affected by at least a flat 10% tariff. And there are countries where we have a trade imbalance, haven't been very friendly to us. There's some calculation that's well over the 10%. Grant, as you mentioned, even Taiwan, 32%, and we get a lot of our chips from Taiwan. And this is theoretically motivation to get, tariffs equal. For example, autos. When we import a car into the United States, we charge a 2% tariff at the dock. When we export cars to Europe, they charge a 10% tariff. So there's got to be some quid pro quo here, some equalization. 25% is shocking, and this is what's just happening across the board. So the president has the ear of every country, and as an economist, financial advisor, it really doesn't work. I mean, they've been paying for a long time. So if you follow the administration's strategy for negotiation, this is shock and awe, and I'm sure it's going to cause some negotiation where tariffs will get more equalized.
George, speaking of shock and awe, the futures down, almost 1,100 points, Asian markets taking a tumble, not going down real well with the market.
It started off really well today. We finished, on a positive note because we had a very good projection of jobs report from ADP. The economy's been doing pretty well. We haven't seen a ton of layoffs, so that's all, going along very well as expected. But, then with the announcement of the tariffs, after the market closed, then we saw the futures market for tomorrow morning trend down. So unless there's some bright news, some positive news, it should be a pretty bad opening tomorrow, just based on what the futures are showing.
So what about folks' 401ks?
Well, 401ks, I have a little different story on that. You always have to find a bright light somewhere. So people that are working and are not ready for retirement are putting away money on a monthly basis into their 401ks. So what are they doing now? The U.S. market is down. The mutual funds are down. They're buying low. They're buying more mutual funds. And then when the market trends up, they're buying high. And so dollar cost averaging, they get the low and the high, and they get kind of an average. That's a disciplined form of investing. So that's great, except for the older people that are getting ready to retire. If they've been very aggressive, and if they've had all their eggs in one basket, the U.S. basket, they're getting the full brunt of the market downturn, which Vicki, we had expected anyway. At the end of last year, we had projected that the GDP, the gross domestic product of the economy, would decline from 2.5% to sub 2%. And we said that the Magnificent Seven, the tech stocks and the stock market, was overpriced, and we said there'd be a pullback of about 5 to 10%. That would be normal in any economy. But then you overlay the tariffs, and the issue on the tariffs really is indecision. The market doesn't know where all this is going. Manufacturers can't plan very well. Hopefully that gets worked out in the next few weeks or so before the tariffs actually hit. The manufacturers have actually kind of front-loaded on this and bought a lot of their materials for making things, early on, and you're seeing a lot of new car sales right now going on.
Here in the Bay Area, one of the biggest issues people have had before all this is just paying for housing, rent, trying to buy a house. What does this mean, if anything, for construction and housing?
Well, Grant, if you're a developer of housing and you're going to spend a lot of money planning tract houses, you can't do that. You're going to slow play it because you don't know what your lumber costs are going to be. Housing right now is expensive anyway to build, and then you start increasing lumber costs and other kinds of things that we import into the country. It really delays planning. What happens is for people that are buying and people that are manufacturing, they're losing confidence. The University of Michigan confidence survey from the beginning of the year till now is down about 15%. Confidence is really important for any developer building houses, any consumer wanting to buy. You have to know you're going to have a job. You're going to have to know the economy is going to be solid for you to take on that kind of risk. Right now, with all the indecision that's happened since the beginning of the year till now, consumer confidence is low. That's key for people to stimulate the economy.
So what's your best advice to consumers who are going to probably start seeing the cost of food and clothing and electronics go up?
Yeah, and that would happen if the worst case scenario happens. But it's likely that the worst case scenario will not happen, so people can't, totally panic. We have to see how this is going to be rolled out. I think this is the first night of negotiations.
So
as he's come out and identified countries and numbers, I think we'll start to see some negotiation. We'll see some, retaliation, I'm sure, of course. But the U.S. is, pretty strong. We've actually helped the world since World War II become a lot more independent from us and really grow their economies also. So these countries are, pretty strong. And so the negotiations should be interesting.
So you think they're going to make a deal? And we're out of time, but real quick, if your car's on its last legs or your phone's kind of on the fritz, should you go buy those things now, or is it okay to wait?
No, it's not okay to wait. If you've reserved money and are waiting for a deal and you have the cash to buy, do it now. That way you're locking in a price at the current situation. If you delay and tariffs do come in, it will affect especially autos and even used cars. When imports become expensive and cars domestically produced here become more expensive, people go to used cars. And because of the demand on used cars, those prices will go up also. So those kind of decisions, if you're planning on doing it anyway, you should go ahead and definitely get it done now. Why take on the risk?
Thank you, George. Sound advice. Always appreciate it. I know you started your morning pretty early, so we're going to let you go.
It's been a busy day, but thank you for having me.
And put your feet up.
All right.
Okay, thank you, George.
Noceti with Morgan Stanley. Thanks, George.
Thank you, Now.